these large vendors told us we couldn't do, Dan, say, can we do this? I don't know, let's try it. And we'd put it together and we'd do it. And then he'd go and say, in your face, we got together and we did it.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I'm so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit that subscribe button so that you can stay up to date with our latest episodes. Moving on to today's guest, we have Ray Hightower. Ray started and ran a technology company for 2 decades before selling the company and shifting into multifamily investing. Today, he leads Bridgetown Partners, a buyer of apartment properties in Arizona, Tennessee, and Texas. Hightower celebrates capitalism. He believes that when good people conduct business, everybody wins. Ray, welcome to the show. Before we dive into it, give us a quick 2-minute rundown of who you are, what your background is, and where you are in your journey to achieving time freedom.
Sure. And Chris, thanks for having me on the show. I've watched you work with this for a while now, and I like the quality of product that you put out. So I'm honored to be here. Yeah, great. So in a nutshell, my background, as you said, I ran a tech company for 21 plus years, built it up from scratch so that I'm now in multifamily. I run Bridgetown Partners. We buy multifamily apartment properties, fix them up, give people a great place to live, and we give investors an opportunity to partner with us and to benefit from our work. That's us in a nutshell.
Fantastic. And a little bit about your background. I saw that here that you ran a technology company for 2 decades. I guess, how did you transition into that technology company? Was this something that you went into straight from college, or were you working as an employee before then? How did that
Yes,
look like?
yeah. My background, I have a computer science degree from the University of Illinois at Chicago. I worked for Hewlett-Packard and I worked for IBM. In the middle of being in corporate America, this was back when I was in my mid-20s, I decided that I wanted to be rich. So I went and became a commercial real estate broker. This was, decades ago, right? And, I closed some deals. I did a whole bunch of random commercial real estate deals. I did vacant land, industrial land, restaurants, apartments. I did a bunch of random deals and one single family home, but a bunch of random commercial deals. And in the middle of that, I did not generate enough revenue as a broker, because brokers, if you're just a broker, there's a limit to how much revenue you can generate unless you're at the very high end of brokerage. So towards the end of that phase of my career, I decided to go back to something that I knew, technology, and that's when I started my tech company. That was called Wisdom Group, based in Chicago. So I ran Wisdom Group. That was a blast. Where it was a challenge doing brokerage in Chicago where I was, Wisdom Group, we were successful almost immediately. I started it in my mother's basement. Doing real estate, I ended up moving back home and doing that kind of thing, which was embarrassing. But 18 months after I started Wisdom Group, we had our first downtown office in downtown Chicago. So that was pretty exciting. We brought in a lot of great clients. We did local area networks for small businesses. And then after running the company for about 10 years, we morphed into software development, building applications for the web and for mobile devices. And then after that, I ran the company like that for about 11 years and then sold it and started the multifamily company. I was still with the company that I sold to for a few years. I ended up in Los Angeles running the Los Angeles office for that company. But I had started the multifamily company or the real estate investment company. I wasn't really sure at the time what it was going to be as a side hustle because, you never know.
Absolutely. Well, Ray, there's a ton to unpack there. And the ongoing trend that we've been finding over the course of running this podcast and speaking to guests such as yourself that have been doing a lot of these big things is that there's a lot of cadence when it comes to going back and forth between business and real estate. And there's a lot of relationship between those two, right?
Yes.
So I kind of want to take this as an opportunity to kind of break down that first venture that you went into, which was becoming a commercial real estate broker. Now, I know that you said that you represented clients on the buy side and sell side on different asset classes. And I
Yes.
wanted to first ask, how did you kind of educate yourself on how to underwrite and present deals that are of varying asset classes, whether they be vacant land, whether they be mixed use, retail,
Yep.
industrial, whatever they may
Yep.
be. These are all different asset classes. How did you start by educating yourself on each and every one of those?
Yeah. Well, this was between 1989 and 1994. And as you're aware, there was no YouTube. So the education was, there were a couple of ways. There were books, like there were the CCIM books were out then. And so I was able to absorb a lot from those. And then I did join Marcus and Millichap for 2 years. And when I was there, that was an education. It was a wonderful education. We were trained on underwriting. Of course, we did it with pencils and HP 12C calculators. And then I started using spreadsheets. I was one of the few people who started using spreadsheets, but the majority of the work we did was with the HP 12C calculator. You just brought back a whole lot of memories asking me about that. But it was wonderful. And at M&M, I met some of the smartest, most aggressive, wonderful people that I met anywhere working with that company in Chicago. And I'm still friends with some of them now. A few of them are higher ups in the industry, and it's just wonderful to know them. So yeah, there was some self-education, but my biggest education on underwriting came at Marcus and Millichap. My education on the legal aspects came, I was with a Century 21 office on the South Side, Century 21 Enterprise Realty Incorporated, run by a guy named Jerome Wade. And I learned a lot about contracts from him. You know, I jokingly say I went to the Jerome Wade School of Law because this dude knew how to structure things so that that deals were in the best interest of both parties, and he was very good at that. And I moved on from there to Matanke Realty Group. I ended up managing an office for Matanke briefly when I was in my, I guess, mid to late 20s, somewhere in there, and then Marcus and Millichap. So, and then with all of that, you know, in that time period in real estate, offices would open and close and all this stuff. So, you know, there's so much I could tell you about that. There are a lot of details in there, but that's just a brief. You asked me, how did I educate myself? I could say we are all self-educated, but I was fortunate to have great mentors and people who knew a lot more than I knew. And that's where the education came from. So I can't say it was about me. You know, Jerome Wade knows a lot, you know, about the business. Had been at it since he was in his 20s, you know. I remember when I joined he was like 41 years old. I was like 25. I thought he was so old, you know, right? But 41's nothing now, you know. And then at Matanke Realty Group, you know, members of the Matanke family were still very active in the company. So I learned a lot from them, as well as people that they had on staff in that company. One guy named Mike Harris, I learned a lot from him. And then at Marcus and Millichap, Linwood Thompson was the head of that office, and then Scott Harris was the sales manager. Learned a ton from them. Learned a ton from a guy named John Seabury, who was about a year ahead of me there. He's still at Marcus and Millichap doing wonderful things there. So yeah, I could go on and on. Scott Gerber is a commercial real estate broker somewhere in the San Francisco area that I learned a ton from. Bob O'Connell. Mike Christie. I could go on and name names. I know I'm leaving somebody out important, but some of these are people that I'm still in touch with now, which is wonderful.
Well, here's the thing, Ray. I mean, the trend that I'm noticing here is that you, as a new, young, hungry commercial broker at the time, you positioned yourself where you were able to meet all of these people and figure out a way to add value to them. And in turn, you were able to expedite your education by learning from their experience. I mean, these are people that have been in the industry for 10, 20 years longer than you have at the time.
Yes.
And they were able to kind of provide you with those insights, both on the legal end, as well as the numbers and the underwriting as it related to that as well.
Sure.
So that's a critical component there. And so, you know, you finally came to a point where, you know, it didn't really make much financial sense. There was a ceiling that you hit where you can only make so much as a commercial broker at the level that you were at the time. And so instead, you completely shifted yourself to a different industry, back to your roots in technology,
Yes.
and decided to start up a company, right?
Yes.
So I find it funny because it seems like all of these startups, they always end up either
No,
starting up in a
no.
garage or someone's basement.
Yeah.
But in your case, it ended up being in your parents' basement. And so what ended up happening from there? How did you position yourself to get started with the startup? And what did it look like during that growth phase of that business?
Well, when I was in commercial brokerage, sometimes if you're not making money one way, you have to make money another way. So I would do part-time jobs, whatever. I will hustle in a second because that's in my blood. It's there are entrepreneurs in my family going back generations, and I can talk about that separately. People that I've admired growing up. And so one of my part-time jobs I took was at a computer retailer in Skokie, Illinois, and I noticed that people would come in to buy these computers. Business owners would come in and buy these computers, but they wouldn't know how to hook them together into something called a local area network. Networking was starting to take off. It had been around a little bit. There was a company called Novell that had a product called Netware, and they were the dominant player in this, but it took some effort to tie them together. Now, when you buy a laptop, you can immediately connect to the internet. You just Wi-Fi, join with a Wi-Fi and you're immediately connected. But it wasn't like that. You'd have to get a network interface card, make sure that the IO base address of the network interface card matched the system that you were using. You'd have to, an interrupt request level had to be matched to the system that you, there's all this stuff. It's amazing. I still remember a lot. Now that you ask me about this, you're giving me flashbacks. It's almost, dude, you're giving me flashbacks. So people would come into the store. The store did not offer a networking service. So I would just say, hey, here's my card. I had some business cards printed up and I'd say, I'll do it for you. And I did it. My first client was a dentist in Skokie, and we knocked it out for him, got some referrals from that. One of my clients from back then, another dentist, dude, Chris, I just talked to him last week. He became my client back in 1990. I don't even think I had named the company in 1993 or 1994. I incorporated the company in 1994, but during the year 1994, I was still figuring out if I really wanted to do this, if I really wanted to start a technology company, and I did. And the dentist, his name is Dan Giaconetti, and he was a wonderful client to have because he was a technology nut, and every new thing that came out, he wanted to try it. And if somebody told him that some of his dental software would not work on a local area network, he'd call me up and he'd say, Ray, can we get this working on a network? And I'd say, Dan, I don't know. Let's try it. And he'd say, cool, let's try it. He's still a technology nut. This dude is awesome. He has a really high IQ, and he's really smart and is very intellectually curious. And I loved having him as a client because we were able to do things that these large vendors told us we couldn't do. Dan say, can we do this? I don't know. Let's try it. And we'd put it together and we'd do it. And then he'd go and say, in your face, we got together and we did it. And I loved working with him. And I just called him up a few weeks ago because I hadn't talked to him in a while. We just had a great conversation. So that's how it worked. And even at that retail store, I made a deal with the other people who were selling there. I said, if you give me a business card of anybody who has a title of vice president of above in any company, I'll give you $5. And so when I wasn't working there, dude, I got to the point where I was only working there on Sundays, and all the other days of the week I was running my company, Wisdom Group. And I did that because I really liked the employee discount, and I wanted to make sure I stayed in touch with these guys on the floor who were collecting these business cards for me. So they would collect these cards. I'd give them $5 every now and then. Here's something for you. I shared this with a group of young entrepreneurs in Kenya. I was there, and they got this. They nailed this. Every now and then, I'd have a case where two salespeople would bring me the same card. And what do you do? Who gets the $5? And I asked this, and the group in Kenya got the solution that I came with. What do you do? What do you do? If two people, they come to you with the same card, VP or above, that's a deal. I told them I'd give them $5 if they give me a lead like that. What do you do?
Oh boy, I feel like maybe you can base it off of prior performance. Could you say like, well, this guy has actually been a really good source of referrals.
Yep.
So I'm going to kind of prefer to get it from him versus the other person.
That is a very reasonable solution. That's a very do it all for priors and give the $5 to one and not the other, right? My solution, I thought about incentives. I said, I want to encourage them to always keep bringing me cards no matter what. So I gave $5 to both of them.
Oh, I love
Because
that.
you know what? Every time one of those turns into a deal, a network installation, that's minimum $1,000, minimum $1,000. And that's only for the first installation. Then there's ongoing maintenance and all that. We would do network installations where we'd collect 50 or 60 grand on one mission, on one installation, right? So $5 is nothing to keep people happy and to keep them bringing me leads.
Love that. Love that. And we talk a lot about these sophisticated forms of marketing and these ways to grow your business through systems, operations, and things of that sort. And it sounds like when you were in the early stages of your business, a lot of these are really just guerrilla marketing techniques. I mean, you're really just being there in the day-to-day, making sure that you just build relationships with these people. And you found referral sources from your other fellow employees,
Yes.
your fellow coworkers,
Yes.
to help kind of grow that business from the get-go. That's
Absolutely.
fantastic.
And it's interesting that you mentioned guerrilla marketing. During that process, my brother, Edward Hightower, very smart business. He's an engineer and a business guy, very smart dude. He gave me the book Guerrilla Marketing as a gift during that process. So I'm not 100% sure. I may have gotten that idea from that book. So I don't want to take credit. I don't want to pretend like, oh, I'm this, ultra smart guy who knew this. I read a lot of books. My brother has been wonderful. He also got me a book about Mike Bloomberg from back when Bloomberg started his company. Because Bloomberg owned a technology company for years. Bloomberg had been fired by, was he at Salomon Brothers or Goldman Sachs? I think he was either at Salomon Brothers or Goldman Sachs. They fired him, gave him a $10 million severance. Now, to you or me, $10 million is a lot of money. You or me would go out and be syndicating deals, and we would turn that $10 million into a lot more money immediately because we know how to do that in real estate. Mike Bloomberg was depressed because he had a $10 million severance. Okay. All right. So he thought about getting another job, but instead he started this technology company providing data to people who were working on Wall Street. So now we see the Bloomberg terminals all over the place. And now Mike Bloomberg is a billionaire, right? So that's another book that Edward got me that was very encouraging. So there are a lot of books out there that I've read that are powerful, have been a powerful influence on me for this.
Love that. Love that. And so
Yes.
you're going through this period of transition in your life. You left your position as a commercial broker. You went ahead and started up this business. How did you go about managing your time during this transition? And what did you eventually end up doing to either step away slightly from your business and or just put systems or things in place to help free up more of your time throughout the day?
Yeah. I didn't always manage my time well for a couple of reasons. One, I just loved solving the problems. I was in love with, oh my goodness, there's an issue with network communication between this router and another device on the network, and we don't know what's going on. Oh, I need to drill into it myself. No, there are people that know some of this stuff a lot better than me because they specialize in it. But I like Rubik's Cubes. I like solving puzzles. That's my thing. Maybe it runs in my family. My mother likes to do Scrabble on her iPad, all that kind of stuff. So puzzles. My father liked puzzles when we were growing up. He had a puzzle box that my brother and I, that he introduced to my brother and me when we were growing up. That a friend of his got, Mr. Tomlinson, who got him that. So anyway, so how I eventually learned to manage my time is through a book called E-Myth Revisited by Michael Gerber, and that got me started on that path. And there are some areas. Truthfully, Chris, there's some areas of the business where I learned to manage really well. My first trip to Africa was in 1999. And the reason I mention that is because I knew I would be disconnected from the office, and I delegated really well because I knew I was going to Ghana for 2 weeks. And, internet was just starting to pick up anywhere in the world, right? It was getting there. My company, we installed one of the first DSL circuits in the city of Chicago in 1998, like a year before my trip to Ghana. So there's still a lot of people who are still figuring out what the internet was. But I did, I went to Ghana and I delegated really well when I knew I wasn't going to be there. I was a remarkable delegator when I knew I wasn't going to be there. And So I tried to think about things as if I'm not going to be here, to delegate in a way as if I'm not going to be here. That's kind of the mental trick I would run on myself to delegate more effectively. But it did not, and even today, running Bridgetown Partners, it does not always work because I love what I'm doing. I love what we're doing in real estate. I was with an investor and friend here a few days ago. We were driving around the Phoenix area, driving around TSMC, the Taiwan Semiconductor Manufacturing Company. I love doing that. I love going to the properties. I love underwriting. I love all aspects of this business. And that makes delegating difficult when I love the stuff that is, I love the acquisitions, the asset management, and the capital raising and getting immersed into that. And that makes delegation difficult. So I don't have a solution for you. I'm working on a solution. Really, the solution I'm using is to pretend as if I'm not going to be here for 2 weeks. And then I'm more effective at it. But I'm not always effective at it. Truthfully.
That's a great way to look at it, though. I mean,
Yes.
At least from a mindset standpoint, like planning for not being there at some point or another
Yes.
will allow you to delegate. But in the meantime, it sounds like you're very immersed in your business because it's something that you love doing and it brings you joy and value. So with that being said, there's still, at the end of the day, there's only 24 hours in a day.
Yeah.
Right. So what does your day-to-day kind of look like now? And how do you structure your life so that way you can do all of these different things that you enjoy doing?
Yeah. I recently started, I've stopped using a standard to-do list because that doesn't work. And instead, I schedule time for the most critical things I have to do in any particular week. So I'll schedule a block of time to work on this project, a block of time to work on that project. And I delegate and share with, my VA. I've got a VA in the Philippines who's wonderful because of her and their team. With our podcast, we have a podcast called Biz Day Global. We went from doing 2 podcasts per month and having a turnaround, taking 30 days to get those out or whatever, with the system we had in place. We are now doing 6 per month, and we can turn those around in 24 to 48 hours. And we have them on social media. That's everything from, we've got a system in place for scheduling the guests and making sure that the guests, I love your system, by the way, for doing this. And I'm totally going to steal some of your ideas, right? Because, you got it going really well. So what I find is, and then anytime I need to hire additional VAs for a special project, I can do that. I've got a system in place to do that. Say if we're doing a pitch deck for a property that we're promoting for our syndication, I can do that. And I've done that before. And then with my partners, I have certain partners. I have partners in every property that I've acquired, every multifamily property that I've acquired. And there's certain ones of us that are just better at things than others. And so we delegate to each other. And I'm here in Arizona, so I'm boots on the ground for anything going on, Phoenix, Tucson, Sierra Vista. I'm going to Sierra Vista for an asset we have down there tomorrow. That's just south of Tucson. That's 146 doors of assisted living. That's just a wonderful asset. So that's how we do it. When my partners and I delegate to each other too. So all of that.
I love that. I mean, as a healthcare provider myself, we are also interested in assisted living just because of the increasing population of seniors that's growing on a day-to-day basis.
Yes.
But I do want to transition into that, right? Because at some point or another, after 2 decades, you ended up selling that technology company and shifting your priorities into multifamily investing, right?
Yes.
So first off, what kind of triggered you to kind of make that decision in the first place? Like what made you say like, okay, I've reached this point of success in my company and I think it's time to transition into something else?
Yeah. I noticed that certain habits I had, this was 2016 when I sold the company. I noticed that certain habits that I had would not lend themselves well to scaling a company. And these are habits born of conscientiousness. I want to be hands-on. I want to be there. I want to look my clients in the eye and say, hey, yeah, I understand. This is the problem you have. I want to be hands-on. One advantage that I had is that we made the shift from doing local area networks into software development and into doing development for the web and for mobile and also user experience design. And that's a whole lot of stuff. I just said a mouthful of stuff right there because those are multiple skill sets. It's very rare that you'll find someone who's very good at user experience design and software development and DevOps, that is making sure that the application runs well on the servers at Amazon Web Services or Google or Microsoft Azure or whatever. It's very rare that you have someone who has all of those skill sets inside of one brain. And if they do, as you alluded to earlier, we only have 168 hours in a week. So even if you are, a Jedi Knight at all of them, someone who's a really good pitcher and a really good back catcher is not going to play pitcher and back catcher in the same game. So there was a lot of that going on. So that was a big catalyst, a big driver in my decision to sell. And I decided, I haven't told this story publicly, but I looked at a list of companies that I would want to be paired with and that I would want to sell to. I made a list of those, and I happen to know the CEOs of all of those companies because I had worked with them, because I had built relationships with them over the past 21 years or less, because many of those were younger than my company. Many of those in startups were younger than my company, but they were better at scaling. I made a list of those companies. There were like 8 or 9 of them. And when I finally made the decision, Chris, I went back and forth on my decision to sell. It was a 2-year wrestling match. I went between 2014 and 2016 wrestling. I would call my brother and say, yeah, I'm going to sell the company. And 24 hours later, I'd say, Edward, hell no, I'm not selling my company. And I put my brother through watching me go through this psychosis for 2 years, him listening to me saying I was going to sell my company and me saying, hell no, I'm not selling, I'm keeping it. And finally, I made the decision one morning that I was going to do it because I knew that I had grown it as far as I would be able to, just based on my personal skill set. And I sent out an email that was pretty much just 2 sentences or 3 sentences, whatever. I said, I'm planning to do something interesting with my company. You may be able to benefit. When can we meet in the next few days? So 3 sentences, right? And there were 8 people that I sent that to. Within 4 hours, I had 7 appointments. The 8th one called me back the following week and said, hey, Ray, I understand you're doing something with the company and I'm interested. What's going on? He said he had been traveling in South America or something. He was incognito. He was away from internet access and he didn't get my message. I said, well, last week when I sent that out, my company was for sale, but I have a handshake deal with someone now. And I had a handshake deal with the company that I most wanted to pair with that had certain skills that I wanted to bring in. And there were a couple of things I was considering. One, there were certain skills that I wanted to develop in myself. 2, there were certain things I wanted to deliver to them. I knew that we were strong in some areas where they weren't very strong. I knew we were strong in those areas, so I wanted to deliver that. 3, I wanted to make sure that the people in my team were taken care of. That was a big thing. And I put together a 2-page document, front and back, saying everything that I wanted to do and everything that I wanted to get, everything I wanted to deliver and everything that I wanted to get. And within a few days, we had a handshake deal, and we closed like within 30 days. And yeah, that was a fascinating experience. It always feels good to work with really smart people, and I was working with some of the smartest people in software development ever, and that always feels good.
That is such important insight, because here's the thing. When it comes to real estate assets, when it comes to this making the decision to sell, I mean, there's a lot of metrics that you can use to drive that decision, right? You can take a look at your return on equity. You can take a look at the market and seeing whether or not that property value has naturally appreciated over time, whether or not you've finished executing the business plan that you had in mind for the property. And then if it makes sense to sell, you just sell. But when it comes to business, and I've encountered this because my parents also have been running a business for the past 20 years. And it's a very different thing in that you have put your blood, sweat, and tears into growing the company to what it is, right? This is a very active role, and it takes a lot of personal willpower to grow it to the level of success that you've achieved.
Yeah.
And so that decision, there is definitely an emotional component to that. And I appreciate the honesty and appreciate you sharing that with us. And so here we are now. You sold the company very quickly, and you shifted into multifamily investing. Why multifamily? What about that asset class that appealed to you?
Yeah, the thing that appealed to me about that, and continues to appeal to me about multifamily. And by the way, I continued to work with the company that I sold to for a few years. I was in Chicago. I was in Chicago, and then I led an office in Los Angeles for a while. So I was there. My focus, my mental energy was really thinking about the multifamily. And there's a couple of reasons why I wanted to do that. One, a big challenge in software development is building a product that people want to buy. And it takes time to build something to the point where people want to pay for it. Now we're at the point where people are accustomed to paying for software on a monthly basis. They pay a monthly fee, and that's how, we call it software as a service. It's available over the web, software as a service, whether it's the tool you use for your back-end investor management, or whether it's like a HubSpot or Active Campaign or any of those. Those are typically paid as, those are typically purchased by the customer as software as a service. But the key thing is, if you are the developer or the development team working on that software, it takes a while for you to develop something that is of sufficient functionality that people want to pay for it. And while you're doing that, you're not getting paid during that time, right? It's like, in that respect, it's like real estate development. If you're building a shopping mall while you're throwing the dirt with a shovel or whatever and putting up the bricks and putting in the windows and the electrical and the plumbing and all that jazz, you're not getting paid during that time. And you need some source of revenue during that time. And for me, if you look at my business plan for Bridgetown Partners, there's commercial real estate at the foundation, multifamily primarily because of all the reasons that you and I have talked about before. Steady, reliable, predictable cash flow. You don't get rich overnight with it, but steady, reliable, predictable cash flow. That second layer is software development, because there's software that I want to write for this industry. I'm a syndicator in this industry because, one, I just love it. Two, I'm becoming more and more every day a subject matter expert in this industry, but because there's software that we want to write for this industry. So that's software development. But we don't know how soon we're going to have something that people want to pay for. So our bills are paid by the commercial real estate. The third layer is community service, because I always got to give back. I'm very active in the Boy Scouts of America. I'm active in the troop where I grew up, where my brother and I grew up, where my dad and mom were very active in the parents groups, all of that. So commercial real estate, software development, community service. Those are the three layers of our company right now. And I forgot what your question was.
No, I mean that. Well, no, Ray, that definitely answered the question. And it's actually a really interesting perspective that comes from you having this type of background that you have, right? I mean, a lot of people jump into multifamily investing for a variety of reasons, but I love how you were able to still figure out a way to incorporate the skills that you have from being in the tech industry and implementing that as a way to add value into the assets in which you acquire. But at the same time, as you're saying, you're bypassing that startup phase. You're bypassing that phase where you're not generating revenue while you're trying to build this product.
Yes.
In the meantime, you can still have that steady flow of cash through the revenues generated from rents.
Yes.
And be able to then incorporate whatever value add products that you have available that would set you apart from others. That's amazing. I love that skill set that you have.
Yep.
And so right now you have a focus in Arizona, Tennessee, and Texas, right? I know you're from Chicago.
Yes.
We are here in Chicago as well. And as you know, I mean, like 40% of the housing stock here is anywhere from like 2 to 4 unit properties, right? I mean, we have lots of small multifamily apartments. What made you kind of jump into larger deals like the ones that you're finding in Arizona, Tennessee, and Texas?
Oh, yeah, that's a really good question. I was living in Los Angeles and I was looking around at buying multifamily. I thought I'd buy a 6 flat or a 10 flat or something like that and build up. And it was then that I learned about syndication. I had heard the word syndication, but this was, someone once said, when the student is ready, the teacher will appear. And I went to Hunter Thompson's conference, the Intelligent Investor Conference in LA in 2020. And then when I was there, I heard about another conference happening in Colorado called the Best Ever Conference. So while I was at Hunter's conference, I got on my laptop and I bought a ticket for Best Ever Conference and I got my airfare and all that stuff. And I went to Best Ever. And between those, I was really exposed to multifamily and larger multifamily via syndication and the tools that we need to do in order to do it. And in between that, I decided to join Rod Cleve's Warrior Program, in Florida. That really took off. I joined his program by July of that year. I was, and then in there, I didn't find any deals that made sense for me in California. So I was going to Arizona to look at deals. And one day I woke up and I said, you know what? Why am I driving back and forth between LA and Phoenix? Costs a lot of money to do that. And I got to pay Airbnb and hotel and all that stuff. I'm just moving to Phoenix, and I now live just outside of Phoenix. I just got up and I moved, and lower cost of living, just across the lower cost of living, more opportunity for multifamily, deals penciled better across the board, more opportunities for syndication. I was in my first deal 4 months after I was here. We closed on that deal 4 months after I moved here with partners who also moved here around the same time I did. I didn't know them in California. We met here in Arizona and we got to know each other, and we're partners on that first deal in Tucson and another deal in Phoenix. And there's opportunities for others for us to do other deals in Arizona as well, and in Texas
That
too.
That's amazing. So it sounds like, I mean, the ongoing thing that you've been doing across the board ever since you're early on in your career is putting yourself in a position where you can find the people that will help drive your business, help drive your goals moving forward from there. I mean,
Yes.
everything from
Yeah.
the commercial brokerage, finding those mentors, to then starting up the company, sticking with your old employer, so that way the employees can still help when it comes to driving deal flow towards your business.
Uh-huh.
And then finally exiting the business, you had those relationships over 2 decades. You were finally able to sell that very quickly. And then here you are now, still doing the same thing, moving from the place where you lived in LA to moving into a market where you want to invest in. I mean,
Yes.
the trend is there, Ray. I mean, this is not any sort of accident. I mean, it's very intentional, and I commend you for being able to achieve all of that.
Thanks, Chris. I appreciate that. Thank you.
All right, folks, so we're coming towards the end of today's show, but before we finish, it is time for the Freedom 5. These are 5 questions that we ask every guest on our show, starting with the most important question: what is your why? What is the underlying motivation behind everything it is that you do?
For me, I've spent some time thinking about, really, it's the core is service. I enjoy being of service. I enjoy being of service, and I enjoy being of use. I enjoy being helpful in a way that people find value. That drives me in the work that I do with the Boy Scouts of America that I've done for decades there. Drove me with Wisdom Group, drives me with Bridgetown Partners, everything that I'm working on with the partners I'm working on here and in Tennessee and in Texas as well. Service, and yeah, that would be my why. And what I, in particular with Bridgetown, I love that what we do, and you do this as well, what we do gives people a great place to live. And we're also giving investors an opportunity to benefit from our work. That's what I love. And the bottom line is service.
Absolutely. Win-win situation for everyone is the way
Yes.
to go.
Yes.
Second question we have here: what book has had the largest influence on your life?
Easily. Succeeding Against the Odds by John H. Johnson. John H. Johnson was born like in 1909, started Ebony Magazine and Jet Magazine back in the 1940s. He started one magazine during World War II, another one right afterwards, and just took off. And he's in his book, he documents what he does. He documents how he influences people, how he brings people together. He documents some things about mindset. He had one employee who was telling him constantly, I don't think we can do this. I don't think we'll be successful with this. And he fired this guy and he said, no offense to you, but I'm not sure if we can do it either. And if you keep talking to me, I'm going to start believing I can't do it. So he just, kept doing that. His mother was very much a big part of his business, and he had role models and mentors around him, as I've been blessed with role models and mentors, starting with my parents and, Scoutmaster and teachers and all that stuff. So John H. Johnson's Succeeding Against the Odds. It is by far my number one book for business that I read from time to time, because it's beyond inspiring.
Love it. Love it. Everybody make sure to check that one out.
Yes.
Third question we have here: what is the most impactful thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
You know what? It's internet access. It's internet access. As we've gotten to the point now, where we start to take it for granted, like it's water or electricity or any other utility like that. But for me, it is so vital, because I'm able to go anywhere on this planet and be as productive as I am right here. At the end of December, I was stranded in Chicago by the whole airline thing, the weather and the failed systems. Well, not a big deal because guess what? That was on December 26th, and I was back here in Arizona by the 28th. So big deal. 2 days I was stranded there. And you know what? It wasn't that bad because it meant that I was able to go back to my mom's house and eat my mom's cooking and hang out with my mom. It was wonderful. It was wonderful. I was able to hang out with my mom because she's a lot of fun to be around. She tries to tell me what to do a little bit too much, but she's still fun to be around, right? And the cooking's wonderful, right? And then, but because we have internet access, I was able to do my Zoom calls and do my email and all of that stuff as if I was here in Arizona anyway. You know, I wasn't able to walk some properties that I wanted to do. Okay, I walked them 2 days later than I expected to. So internet access, number one, I don't take it for granted because internet access enables all of the other applications that we use, be it your customer relationship management software or your content management software for your website or the video call that we're doing now. Under all of that is internet access as the foundation that allows all of that to happen.
I love that. That's a great answer. You're right. And it has come to a point where, there's all of these different ways that we can use the internet, and being very clear about how you're leveraging this as a tool to help grow your business is crucial.
Yes.
Fourth question we have here. What is the number one piece of advice you would give to anyone else looking to achieve more control over their time?
Manage your money. If you manage your money, you can put yourself in a position where you're not trading your time to get more money. And that's number one. And I don't always do that 100% right. I work very hard at that and I stay focused on it. It's the reason I've been able to do all of the things that I'm doing right now. But number one piece of advice, I would say, manage your money.
Love that. It all starts with having a solid financial foundation to begin with, right? As long as your personal financial house is in order, that'll afford you the ability to take more risks, afford you the more time to be able to take said risks and do what it is that you want to do. I love that.
Absolutely. Yes.
Fifth and final question we have here, Ray. What is the best way for our listeners to get in contact with you?
Go to RayHightower.com, and at RayHightower.com, you'll see my blog. You'll see a page called Contact Us. That Contact Us page goes directly to my email. That's the fastest and quickest way to reach me. Go to RayHightower.com.
Ray, tons of really great information today. I really liked how you talked about your transition from being a commercial broker to starting up your own business, to then selling that business, and then jumping back into the commercial real estate space through multifamily investing. I love the vulnerability that you were able to share with our audience in terms of what drove your decision to selling your business, the limitations that you had in yourself in terms of its growth, as well as the systems and the people that you were able to leverage to help that grow. And finally, I like how you talked about the way in which you position yourself to be able to find these new opportunities, such as finding mentors, finding partners, and subsequently finding more deals to take advantage of. I just want to thank you again for being a fantastic guest on our show, and I really look forward to remaining in touch.
Thank you, Chris. Thank you very much for having me. I've enjoyed this experience. So grateful to you for the invitation and for the discussion.
Love it, man. Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Rubio. Till next time.